Well, the markets have come off the day's high. As we mentioned, the gap up was likely to get sold in two on first tick because we're just, aligning ourselves to what happened yesterday. And that's precisely what's happened. We're closer to around that 18,300 odd mark. But let's get chatting with the next management. We have Cummins, the management of Cummins, who's joining in. And, the numbers were an all-round beat. They look good on the top line. The sense that raw material costs as well are cooling off. And the company managed to maintain the margins as well. To understand more about it, we're joined by Mr. Ajay Patil, the Chief Financial Officer at Cummins India, who joins in. Hi, Mr. Patil. Good morning. Well, your Q2 FY23 numbers, they look very, very strong. The quarter number, the revenue number itself looks strong. How much of it was due to pre-buying ahead of the CBCB4 emission norms getting implemented mid next year? And how much of that is due to lumpy orders, say from the data centers business? Go ahead.
Hi, good morning to you and good morning to all the viewers. I think we finished the Q2 pretty strongly, and you did talk about a few points. All I would like to clarify is that in our results, while there is an element of the projects business, as we call it, which did cause a revenue, but that was not the only reason we got a bump. Number two, you raised a point about CPCB4 plus. As many of us know, I think the guidelines are now published, and July 1st, 2023 is the date for implementation. So from a pre-buy point of view, we are not seeing as much a pre-buy in the Q2. But as we go forward, I would say that there will be an element of pre-buy that will kick in. But Q2, we didn't see any significant pre-buy as a consequence of the emission norms changing.
To break this, Ajay, hi, good morning. Could you break this growth in Q2 with in terms of volumes and price increases as well? I mean, did you take significant price increases?
Yeah, it's a combination of two things here. One, we have been taking tactical price increases over the previous quarters. Certainly, those are now catching up with respect to helping us on the pricing side. And number two, the volume is really holding up quite well, both on the domestic as well as on the export side. If you look at the half-year performance, I think our overall revenue is up 25%. Again, through a combination of what we see reasonably stable demand, both on the domestic and export side. But pricing is certainly playing its part.
Okay. So for exports particularly, you've said that in the last 2 to 3 quarters, export is picking up. What would your guidance be for the full year, and have you changed it compared to when we spoke last?
No, we haven't really, because the geopolitical, situation as well as the supply chain challenges continue, although the intensity of supply chain has reduced to some extent. So therefore, we haven't provided any guidance. But what I can say, though, is that what we have observed in the previous quarters, as well as the quarter before, is that the exports end markets across the world where we supply are holding up reasonably well. As an example, most end markets, be it Asia-Pac, Europe, Middle East, Africa, Latin America, we see fairly stable demand in the quarter. And whatever indications that we get, looks like the demand is holding up. There may be a situation where one region may have a softening of demand and the other region might be a bit stronger. So overall, our assessment is that exports would sustain at least for coming quarters.
So around 500 crores per quarter, doable?
Sorry, I didn't get you.
Around 500 crores per quarter? I think that's been the run rate, right? Can you do as well as what you did in the first half of the year on the quarterly basis?
That's the endeavor. Okay. That's what we are really focused on.
Okay, and it's heartening to hear, Mr. Patil, that you're saying that the export market is holding up. In fact, for a company like yours, you could be a beneficiary as well of the European crisis, because I think the demand for gensets are going up. But we'll take that point that the export markets where you are functioning in are holding up. The other factor I want to focus on is the gross margins. They hit a multi-year low, in the previous quarter, but that's gradually improved. Do you believe that the gross margins will continue to improve up? If I remember correctly, at one point of time, you're doing 36% odd of gross margins. Now, that's improved by a couple of 100 basis points in the past quarter in comparison to Q1. Improvement on the cards from here?
Yeah, I think that's the efforts we are taking. And again, maybe in our previous conversations, I might have mentioned this. We look at our margin improvement in a very rhythmic manner. there is a fairly established process in terms of how we manage our cost. Certainly, the commodities, the way the commodity cost rose in the last few quarters. Now, what we have been observing in the 2 quarters that the commodity costs are softening up. So I think that is helping us. Plus, our internal efforts are also contributing. And third, and importantly, as you would imagine, the volume leverage is certainly helping us to keep, giving a sequentially better margin performance.
You were talking about overall exports, right? And the run rate that you're seeing. Particularly, can you tell us how has the performance been in some of the weak markets like Africa? Any challenges that you're facing there, I ask, because every other industry that we speak to is talking about severe challenges in Africa. There's the forex issues, there's the receivables issues. Are you facing anything of that sort? And what's your contribution from there?
I think certainly, Africa as a region, especially in few countries, there are exchange controls. So as a consequence, getting some of the receivables collected is a challenge. However, we anticipated this few months ago, and accordingly, we have changed certain processes on the commercial side. So as a result, our go-forward sales have all been reasonably well protected from a, so to say, credit risk point of view. But to your point, generally speaking, yes, there are challenges in different countries based on what their respective central banks are doing on the exchange control side. On the demand side, though, we see that sequentially the demand is kind of holding up, depending on which segment you look at, whether you're looking at the high horsepower or the low horsepower side of our products. But overall, if you're asking me, generally speaking, I think the demand is fairly stable for us.
Mr. Patil, I recall you had earlier mentioned that some part of your revenues or some part of your execution is getting hampered because of supply side issues. I think it was around 10 to around 20%. Has that improved drastically? Would you want to put a number to that? How much of your revenues are currently getting affected because of the supply side issues?
I think we continue to have some specific challenges with respect to certain components. As a consequence, we are not able to fully meet the demand. Now, it varies from quarter to quarter, but generally speaking, I think anything between 10 to 15% of our demand we are not able to meet as a consequence of certain disruptions in the material supplies. And this is very specific to few electronic components. It's not generally applicable to the entire supply chain. It's very specific to few.
All right. And just a quick question. In the last week or so, Cummins and Tata Motors, they teamed up for that hydrogen-powered engines, right? Will that be, with the listed entity, or is it in the capacity of the JV? Nothing to do with the listed entity.
I think we already have a joint venture with Tata Motors from a commercial vehicles point of view. I think the MOU that was signed by Cummins US
right.
with Tata Motors for the offering hydrogen as an alternate fuel for the mobility segment.
Okay.
So.
Okay. All right, Mr. Patil, thanks a lot for joining in and all the best. That's the word coming in from Cummins. But for the market, actually, it is still very, very quiet. The headline index is absolutely flat. All Cargo Logistics is the next corporate that we're looking at to speak on their results. The company saw a good 24% EBITDA growth, but it's once again higher tax expenses that hit the company's profits this time around. All Cargo has also laid out its FY26 targets, where they expect revenues to be at 25,000 to 30,000 crores and EBITDA around 2,400 to 2,700 crores. Ravi Jhakar joins in now to talk about that. Sir, thanks a lot for joining in. You highlighted the FY26 revenue target of 25 to 30,000 crores. But can you tell us in the slightly near term, what can you expect by the end of FY24 and 23? And what would be the triggers for this move, the growth triggers?
Yeah, so it's a pleasure joining on your show.
Thanks.
Speaking of near term, we would see that in the next couple of quarters, there's going to be a little bit of subdued growth from a macroeconomic perspective. Having said that, we witnessed the same in the last quarter as well, but we were able to still grow by expanding the market share in our business. We see the similar trend to continue. We should be able to hold on to the volumes and also expand by expanding market share. Now, what this means is that the business will continue to go forward. But having said that, revenue, in our case, also contains ocean freight, which is more like a pass-through cost. And therefore, revenue can fluctuate depending on the external market situations, but it does not impact the gross margin since it's a pass-through cost. And therefore, the gross margin and EBITDA would see sustained momentum towards the FY26 goals that we have set for ourselves as management aspirations. But in between, it is difficult to predict the trajectories, particularly on the revenue. I would say on the bottom line, you would see a more sustained trajectory towards those goals.
Right. Ravi, good morning. So you're saying that the sharp fall in freight rates, right? I mean, spot markets have come off very, very sharply. That is all passed through for you. No impact whatsoever, because that is one fear that markets have, that will impact margins as well.
No, so I think we have seen that in the last 2 quarters, the freight rates started coming down around April. So you've already seen 2 quarters, and which is why you would also see that despite business momentum and growth, you might see a marginal Q-on-Q dip in revenues. That's largely to the account of ocean freight rates coming down. And like I explained, yes, they are largely passed through and therefore do not impact the bottom line of the company.
But it can't help, right, Ravi, at the margin? It may not hurt that much, but and that's why you're saying maybe next couple of quarters things are going to be a little subdued. Yeah.
On the top line side, and because there would be pressure from the market, but like I said, our market share has continued to expand, and that has allowed us to continue to grow, and which means that on the bottom line, with the operating leverage at play, we would continue to see growth despite all adversities.
Hi, Ravi. What's the market share? In the LCL segment, what is it currently? And you must be having a target, right?
So we are at about 14%, a little north of 14% on the global LCL market share. And the aspiration is that we would continue to grow that number. We don't have a set target that we can share, but since we are growing faster in the market and that aspiration is to continue that for the foreseeable future, you would naturally see the market share expand from here.
Okay. Your recent acquisitions, Nordicon and Speedy Multimode, can you tell us how has the integration been? What are the synergies? How much is it contributing to your own business?
So I'm glad to share that all the acquisitions we have done have been extremely successful. The Nordicon acquisition established us as the market leaders in Nordic region. And we have significantly grown within the region, and the performance has more than doubled in the geography, and it has also added further synergies to the group. So therefore, it's been highly value-accretive business for us. Likewise, Speedy Multimodes has truly strengthened our position in the container freight station market, making us the undisputed leader and providing the right balance in the import and the export volumes that we handle. So both acquisitions have gone very well. And the larger acquisition at home on Gati is also shaping up quite well. So all the acquisitions done in the recent years have been very, very lucrative and successful for us, I would say that.
So looking to go in for more?
So we are, always proactive and strategy-led. So it's not like there's something available out there. If we feel that there's some requirement, then we would look at an acquisition. Having said that, we do not see any need for a big acquisition, but we may continue to explore strategic opportunities in specific countries, specific geographies, wherein we believe that we can stitch in a deal which can which can be more additive than what we acquire. So that's how we look at the acquisitions, and we will continue to look at those. Yeah.
Okay, with all these acquisitions that we've already done, the thing is debt is also coming off, right, sharply. Just under 400 crores net debt now. And one understands that you are, in the next couple of weeks, you will receive another 300-400 crores. So net debt zero by the end of this year, calendar?
Yeah, so calendar year net debt should be close to zero, because it's already, like you rightly said, it's about 500 crores. And the Blackstone transaction, which should get signed anytime in the next couple of weeks, would bring that down to about 100 crores. So, and that's like more or less the monthly cash flow run rate. So yeah, end of this year will be more like a net debt zero. And that's a very strong position to be in.
Okay, I just want to ask you a question on how the shipping rates are looking at the moment, and whether you're seeing a fall there, because there is some feedback that the cost to ship containers, like from China to US, for example, has fallen by almost 83 to 85% from the peak. I mean, has such a collapse actually taken place? And if yes, what would the impact be for your own business?
So what happens is, these are typically numbers around spot freight rates. Most of the large carriers and large companies such as ourselves work on long-term contractual rates, wherein the hikes as well as reductions are relatively less sharp. And we have seen that, like I said, starting April, freight rates started to come down. And they have now come at a significantly lower level. And we see that these levels could continue from here on. And those impacts are kind of already factored in the last quarter as well. So we do not see that there would be any further correction from these levels.
Okay.
And for the spot market, usually rates are more volatile. So spot markets have also kind of settled down to lower levels, which should actually boost trade. And that should be good for logistics as well, because more trade means more containers being carried, and we'll be happy about that.
Okay, all right. Good to know, Ravi. Thanks so much for stopping by and filling us in with all of those details. We'll have a chat with you in the time to come to get an update on some of those rates. Well, for the markets, we've just moved below that 18,300 odd mark. Par for the course, I would say. Yesterday, we ended lower. Today, we pulled back 50 points odd. A couple of stocks, though, deserve special mention. Apollo Hospitals has moved lower. Ultratech Cement has come in for some profit taking as well. UPL has moved to the low point of the day, so that's a sharp decline that we're seeing out there. But I think the larger names are dragging. So ICICI Bank, it had opened up well in the green. That's moved into the red. That's why the Nifty Bank as well, from trading well in the green, that shaved off. It's up only around 20 points as we speak. ICICI Bank, that's the big one in there. Mitesh Thakkar is back with us. Mitesh, if someone was long, where should they maintain their stop loss now? And when do you see this uptrend intact? What is the level you're looking at on the downside?
We talked about the fact that this on the index chart, the hourly and the 2-hourly indicators are kind of turned down. So either it will be a consolidation or a pullback. I think the pullback is playing out, despite the fact that yesterday there were signs of market being sideways. Overall, this market could give a profit booking kind of scenario when the prices go back to their 10-20 day averages, and that's the kind of thing which I think is playing on. So 18,100 is the positional level. But before that, we have minor support around the 18,250 mark as well. So let's see if it try to reverse and holds the 18,250 level, and then we'll take it from there. But as of now, I think this is not a market to be long into. You wait for a breakout above 18,450, or wait patiently for a entry point closer to 18,100. Having said that, I have one buy and one sell call. The PSU banking space remains on the radar, so PNB is a buy. Keep a stop at about levels of 45 and look for targets of around 49 on the upside. While Z is a stock on the sell side, that's something which is breaking down. So sell here with the stop at about levels of 256 and a target of around 245.
All right, Mitesh, thanks very much for that. So interesting. We find ourselves in a interesting kind of position in the market. Usually going into the end of the year, whatever has been happening happens. It's not as if you start a new trend this late into the year. So that gives some hope that maybe if, whatever we get will be a pullback. And that has been evident. We've been pointing out. If you just look at prices and read the screen, there has been hesitancy. The markets looked heavy, and it's kind of been very sluggish. Broader markets, especially, not so much the Nifty, which has seen intermittent pullbacks. And of course, there are supports as well, 18,200, 18,100. The 20-day is just under 18,100. So, but there's still some distance away. We'll see. 50 points lower on the Nifty. Just one group of stocks is the new age companies, right? They're all higher, and that is interesting. And that tells you they are markets for you, right? You've had this news flow on SoftBank, which is a large investor in many of these Indian listed entities as well, new age companies, and they are having trouble. And you have yields which are higher, but look at stocks. PB Fintech is higher, Nykaa is up 3.5. You look at, I think, a bunch of others which are Nazara, etc., which are also reversing after yesterday's sharp sell-off. Actually, Nazara out of the lot is the big one. 8% gain on Nazara. Stocks at about, 612, 613. Maybe these stocks paid the price earlier, and they are all reversing from low points. Paytm, I think we should also put up. I don't see it as part of the list in terms of what's happening. But Paytm is flat, actually. Nothing very much after yesterday's 9-10% kind of cut. We'll take a break here. We are back. Manisha joins us to tell us what's the latest, what's top of mind in the commodity space. That's on the other side.
Welcome back. Well, it's really quiet for the equity market, so let's get a quick handle on what's happening in the world of commodities. Manisha is here. Manisha, what's the one commodity you're tracking today?
Well, let me add some cheer to your mornings, and I'm talking about coffee prices, which have declined to nearly 16 months in the international markets there. And these are both the varieties. And in the last 1 month, we've seen 22% of a decline in Arabica prices, and 15% down is how Robusta is trading at right now. Prices have eased because of various reasons here. One, the weather really seems to be getting better in the producing countries. The new harvest season has started, so this is arrivals as well coming into the market. And Brazil, which produces 40% of the global Arabica, is also looking at a higher crop this time around. On a year-on-year basis, they're looking at a crop up by nearly 10%. So a near record crop in 2023 could be coming in from Brazil there. Also, there are fears of recession. High coffee prices have led to weakening demand in Europe and many parts of Asia, and that's weighing onto the prices as well. There also is a report from USDA which is suggesting a higher crop, inventories, and an opening stock when it comes to coffee. So they're looking at production up by 4.7% in this year, and the ending stock up by 6.3%. So there is enough availability of coffee in the global markets as well. Also, when you look at the ICE warehouses, we have seen inventories gain up there as well. We were trading at a 23-year lows in sense of inventories there, but they have now increased to 380,000 bags. We also do understand via reports that there is another 160,000 bags waiting to be certified. Once this comes into the warehouses, you would see an increase in inventories. And there's another 1 lakh bags headed to the warehouses as per various reports. So that inventory also seems to be increasing as the coffee prices are declining in the global markets. A lot of coffee is rushing into exchanges, and that is clear from here. In the Indian markets as well, Karnataka is a major producer of coffee, and we have seen prices decline by 15% in the last 1 month itself. We did see prices at almost 17,000 rupees per 50 kg bag. That is now currently come down to 14,000. So decline here as well as the arrival is coming into the markets. So if you thought the coffee is getting cheaper for you, that perhaps may not be the case, because there is no respite in the retail markets there. In last 12 months, we've seen the retail coffee prices at the grocery stores, hypermarkets, etc. gained up by 14.8%. There are reports also suggesting that Starbucks coffee prices have increased by 6% in this year alone. So while the wholesale coffee prices may be declining, retail clearly not easing.
Okay, well, good news for all the coffee drinkers, especially coffee drinkers like me. Thanks a lot for cheering up our morning. But let's go to Vivek now. He's tracking Nykaa and the block deal there. Vivek, over to you.
Well, that's right. So Nykaa has seen quite a bit of a sharp reversal, given the fact that earlier in the morning we had indicated that TPG Capital, as per our sources, was looking to offload almost 1.9% of the total equity, close to 1,000 crores worth of shares exchange hand. And interestingly, we had mentioned that this particular block deal was happening at a very minor discount. So given that, given that minor discount, this particular deal happened in the block deal window, post which the stock has seen quite a bit of buying activity. Now, interestingly, what's actually happened in Nykaa after the end of the lock-in has been a whole spate of block deals and large deals that have happened. So we've seen deals happen on November 11th, 15th, 16th, and 17th. And yesterday, one of the interesting buyers was the Canadian Pension Plan Investment Board. So Nykaa finally, after many days of underperformance, is seeing quite a bit of a perk up in today's trading session.
Okay, thanks for that. And Fortis Healthcare is also what we are looking at this morning. Ekta is here with more. Ekta.
Thanks for that. Well, yes, Fortis is in focus because IHH, which is basically the parent company of Fortis, has said that SEBI has advised them that the open office should be proceeded after obtaining an appropriate order from the Delhi High Court. So that means that they need approval from the Delhi High Court in order to go ahead with the open offer. The IHH is now obtaining advice from the legal counsel on the next steps. Now, remember that this was largely known because this open offer, which has been pending since December 2018, was actually pushed back as a decision back to the Delhi High Court, which is basically the execution court from the executing court from the Supreme Court, which ruled on this just earlier this year. So hence, this is definitely a situation which is in limbo, but the ball is in basically the Delhi High Court's court in order to go ahead or approve or disapprove the open offer. IHH has reaffirmed its commitment towards investors and the India healthcare sector, and that is probably what is enthusing the markets at this point in time, that IHH continues to be committed in terms of their investment in Fortis.
Okay, Ekta, thanks a lot for that. We'll slip into a quick break. On the other side, our special segment, it's the economy. Lata will be joining in. She has Steve Major of HSBC with her to discuss the outlook for the US bonds. Stay tuned.